This is Globalstar on the monthly chart, and you can see that we have some resistance at the round hole psychological number of $3, and we have a recent low where we have support. I'm just going to call it at the round hole psychological number of $1. And we can see recently, if I scroll down to the weekly chart, we see a surge in price, not necessarily due to the technicals, but more so for the fundamentals. And what do I mean by that? Well, let's go to this article. It is coming from Investor Place. Why is Globalstar stock up 25%? Well, they were able to get the former Qualcomm CEO, Paul E. Jacobs. Now, if you don't know anything about Globalstar, they are a mobile satellite communication specialist. And Paul Jacobs, he has ties with XCOM Labs. And so part of his transition into Globalstar is to utilize the technology behind XCOM Labs. So Globalstar entered into a strategic perpetual licensing agreement for exclusive access to certain key XCOM technologies and personnel. Per the release, the license covers a number of XCOM's novel technologies for wireless spectrum innovations, including XCOM's commercially available coordinated multi-point radio system. All right, now why is this a big deal? Well, Paul also was the CEO at one point and the founder of XCOM Labs. So he's very familiar with the company. All right, so a couple things before we continue with analyzing the charts. Globalstar benefits from a key relationship with consumer tech juggernaut Apple. Last year, according to Reuters, the satellite specialists partnered with Apple to allow iPhone 14s to send distress signals from areas outside cellular coverage. And then that partnership deepened after Apple pledged $450 million to further develop its emergency SOS infrastructure last November. Globalstar will attempt to take a big chunk of the private network infrastructure market. Per Counterpoint Research, this subsector printed revenue of $2.5 billion by the end of last year. However, by 2030, this is expected to go up roughly 8-9-fold. However, not all investors are enthused about the stock price. In the trailing 1 year period, shares tumbled about 33%. At one point this year, shares traded hands at less than $1. But as you can see, that dollar level is serving as support. All right, so where do we go from here? Well, this is a big fat M pattern. Let's just trace it out, right? Usually the trough, price pulls back before continuing in that direction. I want to look at this wick over wick at the $160 level, see if that is a level of interest. So let's scroll down to the daily chart. Now you can see on the news, price did gap higher, pulled back to that 200-day moving average, which served as dynamic support before moving higher. Price is pulling back from the 150 level. This is that level I was referring to. A drop in price, couple of basing candles and a drop. And if you can see, price did pull back to that level before moving down. So I would have drew the zone there, but depends on how you drew your zone. You would have got a hit. You could have put it down at the end of the last candle's bottom. So there's definitely some sellers in this area. However, as you can see, the volume was on this candle here, not the candle leaving. And as you can see right now, price is reacting to that level. Like this is a finger and this is the hot oven, and you can see price is kind of feeling that heat. Price is at levels where you have some sellers filling their orders, but potentially right above is where the bulk of the sellers is at. So that's going to be the first test for price. I'm not going to label it as daily sellers, but it is a zone that has to be respected. As price came up to it once, price is coming up to it again. Now potentially what can happen if the momentum is to the upside, these are considered basing candles. So this might just be the pause before the leg higher. Subject to it's going to be subject to whether momentum can and/or buyers can push through this level. It's going to be subject to whether the buyers can win this battle with the sellers in this zone here. Now I'm going to scroll back out to the weekly chart. And again, when you include other things such as this trough from this M pattern, you have resistance here at the 150 level. Depending on your case, your thesis, it could fortify the setup. But the way I look at it is that price is now in the middle. Potentially you do have the downtrend has been violated, right? A low, higher high, higher low, higher high. So potentially you might have a pullback before the next impulse move higher. Conservative investors, wait until this zone is breached and wait till you get a candle that closes above it. Aggressive buyers, have no advice for aggressive buyers. As price is at a level where price can pull back. And in this case, this green extended range candle, there are really no buyers here. So it could pull back all the way back down to the origin of the strong move higher. Case in point, look at the gap on the daily chart. There's no buyers here. So be interesting to see what happens over the next several weeks and months. But be sure I will be paying attention to Globalstar and giving you an updated video in the future. Thanks for watching. Subscribe. Please like the video.